Hello everyone, welcome to Just Invest Today, and today we're talking about Alibaba, man. Holy crow. Have you seen what's been going on in the market? Look what Alibaba has done. This is just 5 days and it's crashed 16, 17%. Who would have thought that would have actually happened in today's market, crashing all that much? Look at the 5-year chart for Alibaba. This price was in 2017. 2017, you're getting the same price of Alibaba in 2017 till now. Can you imagine? See how much Alibaba has developed since 2017? And they're basically saying that Alibaba is actually at the exact same price from 2017, even though it's been growing revenue at like 20%, 40%, 50% since then. And they're saying the company is still the same, even though they've gotten cloud, they still have Ant, they've been investing in new initiatives. They're still saying it's the same business from 2017. Just think about that. So we understand what's happening in the market. DiDi just had a crazy fear of delisting, and now that's crashing the stock price. But before we get really into it, guys, can you please like this video, subscribe to my channel? I'm always providing so much new content, man. So thank you. So we see what's happening with the delisting of DiDi. The actual confirmation of this happened yesterday. They confirmed it. So DiDi is actually going to do a private listing. But Alibaba stock has been getting hammered. All the Chinese stocks have been getting hammered because there's so much uncertainty around the delisting of maybe Alibaba, the delisting of freaking Tencent or JD.com. So there's no calm in the market when it comes to Chinese stocks. So guys, you have to remember, this is the opportunity that you have to understand and enjoy, because without this opportunity, we would never be able to buy Alibaba at these prices. Just think about it. You can buy it since 2017. It's at the same price. You would have never been able to buy it without all this uncertainty and all this doubt. So you have to understand the difference between risk and uncertainty. The market is really uncertain if Alibaba will get delisted from the New York Stock Exchange. But what's the actual risk? If it does, you can still transfer your shares over to the Hong Kong Stock Exchange. So how much risk are you actually getting? And then on top of that, China's securities watchdog, the CSRC, says a report on China's possible ban on overseas listing through VIE are not true. And this comes after the Bloomberg article saying that they're going to ban all the VIE structures from the New York Stock Exchange. And look what happened. The watchdogs of the Chinese regulators came out and said no. This wouldn't even be a discussion. Xi Jinping makes sure all the regulators are on point and they have his well wishes. So he wouldn't have said this. He wouldn't have get the okay for the regulators to say this if this is not true. So just the delisting risk is not even there if the Chinese government is coming out and saying that. And on top of that, the New York Stock Exchange, Biden, if they end up delisting, and they have to wait like 3 to 4 years for them to do that. If the Chinese companies don't abide by their rules, yes, they can delist Alibaba, JD.com, and all those companies, but they have time to develop into that. So, and the CCP said they're going to work with the Biden to actually help with that process. So I don't see the risk as everyone else seeing it, and I'm actually buying more. I'm gonna do a separate video on that, but I'm buying more. My cost basis right now is at 190, and if it goes lower to like 100, Alibaba goes lower to 90, I'm gonna buy more. I'm gonna try to get my cost basis as low as possible, as long as it has money on the side. So Alibaba stock is getting hammered amid fears that the Chinese e-commerce giant may be forced to lose its primary listing on New York. Reports suggested that Chinese regulators will restrict companies' abilities to list overseas, raising the prospect that Alibaba and other groups may be forced to ditch their listings on the New York Stock Exchange. And man, that's just not true. Maybe for DiDi, because remember what happened with DiDi and the Chinese government saying no, you cannot list now, but they just didn't care. They listed on the stock exchange for $4.4 billion they got, and then the whole security risk just hammered them down. And that's what DiDi is facing. But Alibaba has been okay, been cruising fine ever since. It's just since all the regulatory fines and all the regulatory issues and all the anti-monopoly practices is scaring investors. And remember, man, you are owners of the business. We are owners of the business. This is gonna go by. Like, you're gonna think 2 to 3 years down the road, you're gonna be like, oh, this was like a non-issue. And if it is an issue, you can still have it on the Hong Kong Stock Exchange. You can still have your shares of Alibaba. So I don't see the big worry like everyone else sees it. Maybe I'm looking at this a different view. Guys, tell me what you think. Guys, in my next video, I'm gonna talk about actually why I'm buying more. Because I'm buying more. I got my cost basis down to 190, and I'm gonna continue to buy as the more regulation hits it, more regulation comes, who knows what happens. But that's it, man. Guys, tell me what you think about this video. Like it, subscribe to my channel. Get back to you in the next video.